Assalamualaikum and good day to Prof Shamharir and my friends. We are from Group 5 and we would like to present on the auditing of long-term liabilities, shareholders' equity and also income statement. Our group consists of 6 members and here are our members. Just as the audit process is carried out on the financial record of cash balance, inventory, PPE and so on, the auditing also needs to be done on long-term liabilities, shareholders' equity as well as the income statement. Similar to other financial records, these 3 financial records also might be unfair and not relevant due to fraud and error that might occur while management preparing the financial records. As stated in the slide, those are some of the misstatements that auditors should focus on.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURAIDA ADLIANA binti Muhammad Najib, matric number 2A1602. So today I'll continue the presentation with audit of long-term liability. For this audit of long-term liability, the auditor must be assured that the balance sheet amounts for the various types of long-term debt are not materially incorrect or misstated. This assurance includes interest expense recognition. For the vast majority of entities, conducting substantive testing is a more efficient strategy. There are few assertion and audit procedure for audit of long-term liability, which are existence or occurrence. For this assertion, the audit procedure is the auditor need to obtain an analysis of long-term debt accounts and related interest premium at year-end and discount account. Another thing also, the auditor can also inspect bonds redeemed, retired or surrendered during the period. Next assertion is completeness. For completeness, the auditor need to trace authorization for debt to credit issuance to the long-term debt account. Third is right and obligation. For right and obligation, the audit procedure is the auditor must to examine the payment and renewals after the date of statement of financial position. They also need to examine the minutes of board meeting. The fourth assertion is presentation and disclosure. For this assertion, the auditor need to examine the presentation of long-term debt in the financial statement and also examine whether the obligation is secured or unsecured. The auditor also can send the letters of confirmation to the financial institution. Last assertion for this audit of long-term liability is valuation or allocation. The audit procedure for this assertion is the auditor need to determine the amount of long-term debt maturing within 1 year by recalculating the interest expense and amortization of any premium or discount. I'll continue the presentation with audit of dividend. Auditing dividend is the activity of auditors to examine all dividends declared by a company to its shareholders. It is important for the auditor to confirm the amount of dividend recommended by the directors and declare in the general meeting. It is because of concerns of violation or corporate bylaws or debt covenants. The audit assertion and audit procedure for audit dividend completeness. For the audit procedure for completeness is the auditor can do reperformance. Like auditor should apply the reperformance procedure like keeping a record of the client's board minutes. They can also examine the supporting document for the dividend declaration, which the dividend declaration is being placed to the general ledger. Next is existence. For the existence, the audit procedure is the auditor can do the inspection of documents. For example, all the dividend transaction should be documented in board minutes as a proof of approval and the declaration. So ensure all the dividends are recorded in the current accounting period. The third one is presentation and disclosure. So for presentation and disclosure, the audit procedure is an analytical procedure. The auditor should apply the analytical procedure, like ensure that the dividends are recorded and disclosed at the true side of the financial statement, which is under the headings reserve and surplus. Next, one of the importance of disclosure is include the dividend rate, dividend preference, errors, dividends, and any judgment made to the prior period figure should be stated in the financial statement.
So I will proceed with the audit of share capital. While conducting this audit, compliance with law and regulation should be the focus for the auditors. Share capital accounts may alter when company issue or repurchase share. Thus, substantive tests should be done throughout this audit process. Here are some of the accession and audit procedures that should be looked into while auditing the share capital. Firstly, completeness. Auditors need to confirm capital stock with the third parties and inspect the cash receipt ledger as well as the schedule of treasury stock repurchase. The next one is presentation and disclosure. Auditors are responsible to inspect the Board of Directors minute approval for the stock option and trace the capital stock ledger with general ledger to ensure the accuracy. The last one is valuation and allocation. For the share that were issued by cash, auditors should double check the share issued with cash receipt journal or with supporting documents. While for the non-cash issuance, they need to ensure clients record the share issue according to the accounting standard.
Hello, my name is SYAZWINA binti JAILUDDIN. My metric number is 281550. I will be presenting auditing of reserve and return profit. A reserve audit examines a geological and reservoir engineering processes from a certain date. Meanwhile, audit of return earning analyze fluctuation. There are 4 factors must be considered to audit return earning. Firstly, accession and audit procedure. Number 1, completeness. Completeness is vital to keep a record of transactions that pertain to return earning. The procedure is keeping track of each of the client board minutes. Number 2 is existence. The dividend that are to be paid out to shareholders are to be discussed during a board meeting. The procedure is checking and confirming the transaction involving dividend that are declared and paid through the bank accounts. Lastly, presentation and disclosure. This is included in the notes to the financial statement any limitation that might also be applicable to return earning and dividend that were already paid in the arrears. The procedure for this assertion is a balance sheet reserve and surplus should list return earning. The second factor that must be considered to audit return earning is audit risk. When a client internal control system cannot detect or prevent a material error in the statement of changes in return profit, control risk exists. The auditor must approve board minutes pertaining to return earning, which can be used for dividend, buybacks, and right issue. Third factor that must be considered to audit return earning is internal control activity and test of control. Management, the first internal control activity is management ought to perform regular checks and balance on the equipment account. Test of internal control is ask management how equity accounting is accurate and complete. The second internal control activity is employee qualified personnel and make sure their work is being evaluated. Test of internal control is asked about the hiring process and whether the management has approved the changes. Last factor that must be considered to audit return earning is substantive test of detail. Firstly, check the board of director minute for dividend declaration and then the general ledger. Second is identify the sequence of return profit adjustment in previous period. Next, I will present audit of reserve. Capital reserve is a firm profit-based capital access over time. The auditor capital reserve duties include examining its nature, ensuring it is used to cover capital losses, ensuring it is shown separately in the balance sheet, and determining whether it is invested in outside securities or retained in the business. For revenue reserve, it is created when a company annual net profit is transferred into its reserve account. In revenue reserve, it is the responsibility of the auditor to investigate the company article of association and verify the mode of operation, investigate the purpose of operation, and disclosure in the balance sheet. Next, auditing of income statement. Auditing of income statement is a task performed by the auditor to ensure that management has presented financial statements that are free of material errors. There are 5 assertion and audit procedure of audit income statement. Firstly is accuracy. All figures in the income statement are true and correct. Audit procedure for this assertion is check if the value of revenue, expenses, and profit is recorded correctly. Second assertion is existence. The information being offered is accurate and free of deception. And audit procedure for this assertion is check whether the revenue and expenses recorded really took place. And the third, completeness. The income statement are complete and contain all information required to make a statement for a certain accounting period.
To sum up, by the end of audit procedure, auditors are able to achieve the audit objective and produce true and fair audit report. That's all from us. Thank you.